Let's move on. The Nigerian stock market has had a bull run so far in 2025, posting nearly 50% index return, one of the best in Africa and globally. Now, the market performance comes on the back of positive investor sentiment to fiscal and monetary policy actions, good earnings by listed companies, as well as corporate news, among others. And there's more to chat to in the Nigeria's market news now as we begin the countdown to the final weeks of the year 2025. My guest on this, as I mentioned earlier, is Chukwu, a market professional and the group CEO at Cowrie Asset Management. Great to have you again on the Arise Exchange tonight. We appreciate your time.
Thank you, Bosin, for having me. Good day.
Thank you so much. Good evening to you. Let's begin with the equities market. How has the rally been sustained all year till now, even as we see the end of October, the first month in the fourth quarter?
Yeah, Boston, if you look at the market, the macroeconomic variables are showing some green shoots. We see inflation moderating, we see exchange rates stabilizing, we've seen GDP growth rate improved to about 4.23%. Inflation rate at the last count was 18.02%. And then we've also seen exchange rate in the region of 1,465, 1,400, below 1,500. These are indicators of stabilizing economic environment. So market operators are taking advantage of those improvements. And so you see a lot of people are exiting even dollar positions and moving into Naira instruments. Moving into Naira instruments will mean either we move into fixed income instrument or we move into equity instruments. With what the equity market has returned so far this year, investors would rather prefer to be in the equity space than to be in the fixed income space. Also added to the fact that we are seeing a contraction in yield in the fixed income space. So those factors fueled investors' appetite for equities, which is why we've seen a year-to-date gain of about 51%.
But do you see a major correction in the equities market ahead of the year-end holidays?
I don't think so. We may see some correction like we saw marginal corrections yesterday and today, where the market today lost about 0.09%, which is basically flattish. I think what you may see is that if investors are concerned about the capital gain that will be introduced from 1st of January next year, some investors may want to exit temporarily and come back to the market so that they will lock in the capital gain they've made this year. And I think that may actually have accounted for the market, the negative market performance in the past 2 days, where investors said, I've made good money so far this year. Let me lock it in and come in at a new carrying cost or a new cost of investment so that my capital gain that may be imposed on me when I exit next year may not be as steep as if I hold on and the entry cost is what it was at the beginning of this year. So that may be a factor that would drive some minimal market correction. But on the converse, we're also seeing quoted companies making very good returns. We saw the published third quarter results of most of the companies that have already published. We've seen quite impressive results being published in the third quarter by the quoted companies.
So let's take a little bit with the equities. When you look at the road we've traveled so far this year, were you surprised that after those reforms that we saw 2023, 2024, the market came piping red hot into the new year, softened a little bit around the end of the first quarter, but it looks to gain that momentum up till now?
Yes, Boston is actually a very positive thing because I wouldn't say surprised. What I would say is that I did not expect the market would gain as much as 51% this year, given what the kind of performance we recorded last year. I thought in the past 2 years that we would have basically achieved a level of market prices that market may cool a bit this year, but that is the converse. But again, the macroeconomic environment this year are a lot more positive. I mean, it's a lot more positive than it was last year. So, and also given the fact that operators in the market are, quoted companies are also making good returns in terms of profitability, in terms of dividend payment. But most importantly, we've seen a stronger Naira. And even those who had previously preferred to hold their assets in foreign currency instruments are now converted back to naira. And when they convert back to naira, they also see opportunity in the equity market. Again, foreign portfolio investors are seeing opportunities of not only capital gain in the equities market, also exchange gain when they come in and exchange at a lower naira value, and the time they are exiting, naira had actually strengthened. So for those who are local investors, it makes sense that you convert, if your asset is in local currency and then you had actually transferred part of your assets in foreign currency, it makes sense for you to now sell and come back and stay in the local currency space.
Okay, let's shift the conversation a little bit into the fixed income markets. The news reports has it that the central bank is stepping into the debt market trading via the FMDQ effective next Monday, November the 3rd. Walk me through what the central bank is actually looking to achieve.
Well, I think the central bank may be looking at having a stronger control of over monetary policies. They are looking at the major instruments that influence demand and supply in the monetary market space, in the monetary space. And the fixed income space, fixed income instruments are the major instrument that determine demand and supply in the money market. So if they have a control or oversight function on fixed income instruments, that means they can reasonably estimate how the market reacts to monetary policy changes. And they will also be able to influence the direction of monetary policy in a stronger way. Bear in mind that Nigeria, we have a very weak transmission channel because we don't have consumer credit. So the major transmission channel is the fixed income space. And if you recall, one of the things the central bank does is that whenever it wants to influence the level of liquidity in the economy, not just using the monetary policy rate, it will increase yield of fixed income instrument, OMO instrument, Nigerian treasury bills, and then it suck up liquidity into the central bank and reduce the level of money circulation. So by controlling that fixed income space, it will have a stronger hold on monetary policies.
Okay, so what's the outlook on what happens on November, from November the 3rd? I'm sure you're in the market, and of course, I'm sure, how are you market professionals and dealing firms preparing for this major structural change in the fixed income space? What's going to change and how will it change?
Interesting, Boston, whatever we change has been priced into market into the fixed income yield environment or market prices. If you look at the fixed income space, you will realize that we've seen a contraction in yield in the past couple of weeks. And interestingly, investors are still willing to take on fixed income instruments. You can see the bid rate actually outstripping demand supply for fixed income instruments. So in terms of regulatory environment, we are waiting to see if the regulatory environment will change materially. I think in terms of the trading mechanism, the central bank will do everything to sustain the trading mechanisms of quote and offer system so that they don't distort the market environment. I also think the central bank will ensure that they only intervene minimally in the market so as not to jeopardize investors' confidence.
So in terms of yield, what's your outlook? Again, as the central bank did what you could call a symbolic rate cut. So are you expecting that? How do you think that will impact us moving into the final 8 weeks of the year, as it were?
Well, I think what I should actually expect is a very split. I expect the central bank will further cut rates when they meet in November. And bear in mind that, like I said, there were a lot of green shoots. With FATF removing Nigeria from grey lists, it then means that both foreign investors and local investors will have increased appetite for Nigerian fixed income instruments, so which will allow central bank to further price down yield in the money market space and reduce the cost of borrowing of the federal government. So what you're going to see is that as instruments mature, central bank will issue instruments at a much reduced yield so as to cut the cost of funds, as well as also encourage private sector borrowers to borrow at lower rates. Because once banks, the opportunity for investing in federal government instruments at high yield reduces, the banks will now look at what other asset class would they have to create, and the banks may be more interested in lending to the private sector.
Interesting. Okay, let's talk a little bit about the earnings season. It's now getting underway. Talk to me, what are some of the trends you're seeing in the numbers?
Well, Boston, if you look at the third quarter result that have been published, look at the likes of Bua Cement that had over a 800% increase in earnings per share. You look at Dangote Cement that also had a material increase in shares of yield. I think about 400% increase in yield. And then you look at the likes of Presco. We also saw a material almost 100% increase in earnings per share. You look at Transcorp, improved returns. So virtually all the companies quoted recorded improved return. Even Access Bank, that people said, people think that they did not record so much return. If you look deeply and you break down the performance of Access Bank, you realize that the operating income actually improved. Because if you look at the core business of the bank, which is lending, so its fund-based activities saw a jump in net interest income by over 91%. And granted that the profit after tax reduced marginally from 281 million to about 215 million, but bear in mind that in the previous year, the first half of last year, the bank recorded about 406 million naira in exchange gain, where it only recorded about 45 million naira in exchange gain in the current year's half-year result. So if you adjust for that, you realize that what matters is a bank growing its core business, which is that of fund-based activities, and there was a material growth of 91%. So an analyst that takes a deep look into Access Bank's performance will observe that the bank's core business is increasing. The one-off gain reported last year, first half, which is what exchange gain, that was not repeated, was obviously compensated by improvement in its core business, and that's why the decline in profit was very marginal.
So let's talk about Transcorp, and you just touched on that earlier. This is the largest indigenous non-banking conglomerate on the market. How would you trade the latest numbers?
Well, interestingly, Transcorp also recorded a very good performance in its 9 months results, because it actually saw an increase in almost all the income heads. And then it showed reasonable improvement in the management of its cost, because if you look at the top lines were improved, and the bottom line was also recorded significant improvement. So, and when you see a company's top line improving, it simply means it's generating more businesses. And that's actually what matters most, because I could remember that if you focus only on cost, I mean, one of the industry leaders in Africa actually said at a forum I attended a couple of years back that there's a limit. You can't slim yourself into prosperity, into wealth. So what I've seen is the lack of Transcorp is showing material, consistent improvement in top line. And that's also reflected in their bottom line, because if you look at their even earnings per share, we saw a material improvement in earnings per share, which will obviously flush into the benefit that will accrue to shareholders.
Very interesting. Okay, let's leave it there for tonight. I'm sure we will, as always, we'll touch base with you. Quite a lot to clarity you provided on those deep insights on Nigerian markets and macros. Thank you so much, and we appreciate your time with us. It's been a very good year so far for folks on the market street. Johnson Chukwu, the group CEO at Takari Asset Management, do have a great evening there.